Hi and welcome everyone to today's presentation of Capacent. My name is Stefan Knutsson. I'm an equity analyst here at ABG. And with me today I have CEO of Capacent, Edvard Björkenheim. Welcome.
Thank you. All right, so I will go on. The objective is today to give you a brief update of where Capacent is today and where we are heading going forward. Shall we start running then? Many of you might know Capacent, but let me just give you a brief introduction. We are a consulting firm, originally founded within ABB, today there's around, and since 2002 we have been operating as an independent company. We are slightly shy of 100 employees in Sweden and Finland, and we have a wide network of associated consultants who are an integral part of our sales and delivery capability. We see that many companies have difficulties in navigating through the current business environment that is changing at an ever faster pace. Many companies know what to do, but some lack competence, technology, leadership, the right people, and tools to do it. People in the organizations are choked on actions that do not lead to desired effects. And what is interesting is that despite the democratization of information, I mean, all knowledge is really available on the internet, and the swift technological development, implementing change seems to be more difficult than ever. Therefore, we help our clients to turn constant change into impact and build more resilient organizations. And we do this through our services of management consulting, interim management, and search and leadership services. Let's move on to slide number 3. So Capacent was, let's go to slide number 3 then, as mentioned. Capacent was listed in October 2015, and between 16 and 18 we nearly doubled revenues, both organically and through acquisitions. Since then we have as well started 3 businesses, Capasearch, Capacify, the interim business, and now very recently Capalead, leadership development. And I think we've been happy with our growth as such, and especially with the new businesses. They account today around 1/3 of our revenues. However, profitability-wise, clearly less. And we see a big potential in improving profitability here in these new businesses. In the summer of 2019, we decided to initiate improvement actions within the management consulting business, for which we were not really happy with the profitability in that part. Now, then came Corona in Q1, and we really accelerated all the planned activities and did them basically in Q2, and they are ongoing, of course. I will give you a glance of what has happened this year, because it's really a sort of changing event for this company. Let's move on to slide number 4. This year, as mentioned, has been a year of transformation. We have redesigned the organization into smaller entities with the objective to be both more customer-centric, quicker, and more focused within the entities. None of our entities currently have more than 21 employees, for instance. We have combined this by changing the steering into a more decentralized way, thereby, for instance, cutting down on central functions like IT, finance, and HR, which the entities are now taking care of. And in this transformation, 2 of our entities didn't make it and were discontinued. That was Icelandic entity and 1 entity in Sweden. Now you can see the legal structure in the picture. That's how we operate the business today. If you look at the first 4 entities on the left-hand side, they are all management consulting entities. And then we have Capacify, which we are about to split into the interim business and a software part where we have developed a competence enhancing or evaluating platform. Then we have Kappa Search, and then finally Kappa Lead, our latest newcomer. In addition to these activities, we really have started to accelerate the service development, and that's really a big thing. And I'm really happy with that, how we progress there, and I will come back to that later in the presentation. And then finally, we have changed our financial target, moving away from a volume-based and margin-based to a combined measure of earnings per share. Our target is to improve earnings per share by 10% on average yearly, and right now we are overweighting profitability, but we definitely have growth opportunities as well. Let's come back to those as well later. Moving on to next slide, which is the Q3 figures. I think Q3 is typically not the most interesting in our business. It's typically the quarter where revenues are the lowest, thanks to the summer season. But I think these figures are really interesting now when taking into account all the activities we've done in that transformation. And it's interesting, especially from a profitability point of view, where we've managed to turn the profitability from -16 EBIT last year to +16 this year. And this has been achieved through an increased revenue per head count. Keep in mind that we have smaller entities now, very few persons who are not facing customers. Practically everyone is doing that. Combine that with then a lower cost base, and here we are in Q3. If you look more closely at the figures, you can see that the management consulting business is delivering very high profits, clearly north of 20%. And we want to be there. We want to achieve a new level of profitability in that business. And I think we really are on a good path there. Secondly, we have the new businesses, as mentioned, that account for around a third of our revenue. And there our focus is to improve profitability. And longer term, we could go up to 10% in the interim business and perhaps up to around 20% in the search business. Now, we have set a new target, a new financial target, which is related to EPS. And if we just in an isolated way look at this Q3, we are delivering 1.5 kronor per share profit. Just to relate that to something last year, which wasn't a good year, we had 1 kronor during the whole year. So again, I think we really are on the right track here. Let's move on to the next slide, slide number 6. Well, we are in the business of change, and we definitely identify change out there. It's affecting us, and it's especially affecting our customers, and it's affecting the way our customers are buying services. So we really need to be on top of these things. First of all, I think that companies are working in shorter cycles than earlier, mainly for the reason that there are so many unknown variables out there. Especially growth companies are working in a more agile way, whereby they set a target or a vision, and then they, through shorter sprints, they try to, in an iterative way, to find the right path to walk in the right direction. Even in mature businesses and mature companies, the planning horizon is shortening, and we see less of the 3 to 5 year strategy periods that has been a tradition. And the consequence of this is, of course, that this puts a lot of pressure on the company, on the companies, on our clients, to start working in a different way and to be better at managing change and creating quicker impact. Secondly, which is related a bit to how our customers and companies in general are being managed, from the very centralized way in the 2000s, we are clearly into a decentralized steering and sort of leadership philosophy currently, where empowerment and engagement is leading words. What does this mean in practice? Well, it means that decisions are simply being made lower down in the organizations. Not as often do we see the top-down decision by a group CEO saying that, yes, let's start this development initiative group-wide right now. We rather see, a freedom and empowerment in the entities, and even within the entities, the decisions are delegated to certain teams. And what does that mean for us? Well, it means actually that we need to interact with a lot more people within our customers when we are building relationships. We cannot anymore rely on just having a good relations with the CEO or top management. Secondly, it means that while we are interacting deeper into the organization, we truly need to understand the customer needs and which direction they want to move. Software and tech providers are taking a bigger role in the market, and that's not very surprising. Most of our operative processes are now somehow integrated into different softwares, ERP or whichever software is being used, even robotized and automated. Analysis tools, BI tools are out there as well, automating analysis and business insight. What these service providers are not that good at is to make sure that to really understand what the customer needs in the first place, and then secondly to train the personnel and make sure that we really get the benefits planned. And there I think we have a clear role. Fourthly, needless to say, Corona is changing a lot. We've been delivering projects now this year, many projects, both sold them and delivered them without meeting the client physically even once. This would have been unheard of a year or two ago. Secondly, it changes, of course, our customers' businesses. Suddenly, new sales channels appear. A need to redesign the supply chain comes up when sales channels change. We had a customer here very recently, for instance, who had geared their operations to serve wholesalers, and then suddenly the demand in the web shop exploded, and they needed to re-gear the whole distribution setup. And then finally, the market keeps on consolidating. We see these big companies, big consulting companies buying tech and design companies. We see big IT consulting companies buying management consultancies and interim businesses, etc. And they all do this to become more relevant to their customers. But I think that we will have a good position here, being a flexible, very customer-centric player that truly understands our customer needs. Now, the world is changing, and so are we. Around a year ago, we set a few strategic themes that we are working on now more than ever. And I believe that the most successful service companies manage to combine customer centricity and high-value services with achieving own business objectives. And that is exactly what we want to do here. We want to achieve longer client relationships, and we want to do that by being very customer-centric, understand the customer, develop things together with our customers, and be very innovative. And by the longer customer relations, we want to create more stickiness in our services, thereby getting more recurring elements as well in our services, and gradually complementing our very transactional business model with a more ongoing business model. Then, as mentioned, the customer's buying behavior is changing, whereby we as well need to change the way we communicate, interact, and sell our services. And we are about to increase the effectiveness in how we sell our services and market them as well. I will come back to that soon. But we need to make sure that our customers in a wider range knows what we are good at. Now, a lot of this is really about culture, mindset, leadership, but as well regarding the harder parts of change, like target setting, structure, and steering models. And I mean, we have now reshaped our group. We have good leadership in place, a good leadership structure as well. And I think we definitely are on the right track. We are supporting our consultants by training them and giving them tools through a newly launched innovation program. And we have a steering model that is OKR based, quite flexible and quick. And in general, I would say that we believe that change making is a skill itself. And we want to be best at that in all our disciplines, and combining our services, we can truly serve our customers in a holistic way. Now, just coming back to how to get to the objectives, that was part of it. But then secondly, I'd like to point out partnerships. And with partnerships, I mean both technology partnerships, but as well partnerships with other consulting companies. We have many of those partnerships already and are building more of them. Everything from partnerships with softwares in robotics to partnerships with an IT company where we are developing a new solution totally for our customers. We are even developing our own software in Capacify, which we will then separate into a new own company, as mentioned, to give them the best possibilities to continue on that line. As mentioned, our customers' buying behavior is changing. We launched a year ago a pilot within inbound marketing in Finland. We have great results there, and combine that with social selling as well as with account-based marketing, which we'll start to work on as well, creating this more sort of scalability in sales and lead generations, and the ability to interact with more people out there in the organizations. I think these are the main points, really. We are working on our culture, on change-making capabilities, and I'm really happy with the progress in this work. We have accelerated this, as mentioned, since Q2, and are on the right track. Now, just to summarize, why invest in Capacent? Well, I feel that the company has a bit of a new start now, and I think we have a very relevant set of services that we will be developing in a direction where we want to have longer client relations, and we have a great list of customers already. Secondly, we have a debt-free company. We are improving our profitability significantly in our management consulting business, and we will be improving our profitability in the new businesses that stand for around a third of our revenues. Profitability is overweighted. However, we still want to grow, and we have good opportunities to do so, both organically by expanding the platform to Finland, and then by setting up new entities that meet customer demands, and by evaluating M&A opportunities. And finally, our dividend policy is unchanged. We believe that a service company should not be too cash rich, and the policy is to pay out the year's net profit, depending on potential needs in working capital and investments, of course. That's it.
Thank you, Edvard, for the presentation. I want to start off with your Q3 performance here. Your new organization was certainly off to a good start. Can you tell us a bit more how you achieved the magnitude of improvement that you did in just one quarter?
Well, I think, as mentioned, that we have the number of entities is higher than it was earlier, but the people, or the percentage of people facing customers, is clearly higher than previously. Everyone in the entities basically are working towards customers, and that wasn't the case necessarily. That wasn't the case previously, meaning that the revenue per head count increases. I think that is really key. Secondly, of course, the cost base is clearly lower now, and we have really overlooked all costs, and yeah, that's simply how it is.
And I suspect that you had still some demand uncertainties regarding COVID-19 in the third quarter. Can you tell us anything about how you view the start of the fourth quarter and looking into 2021 in terms of Corona situation?
Well, it's clear that the Corona situation, creates uncertainty, but I think we are handling it pretty well, and more than ever we are really resilient to handle it. So I don't see. I mean, it looks pretty promising, I would say, in general, without sort of giving any guidance, and we are really working hard to maintain these levels.
And in October, you started your third new business organically in Capacent. Can you tell us a bit more about that business?
Well, as mentioned, I think the change making itself is a skill, and we want to enhance that. The soft parts of change making is even more important going forward, especially now that there's this decentralization trend. So I think it's a natural and good complement to our current businesses.
Is this a feature that investors should start to grow used to, that you can start new businesses from scratch?
Yeah, I think you can, and I think we have done so already with these 3 cases during 2 years. So whenever we find a good service that complements our other services and fulfills the business requirements that we have set, that we can create longer client relationships, then yes, we will do it.
Is there any specific areas that you're looking into?
Well, not right now. We don't have anything right now ongoing, as this Capacent was started just 2 months ago. But I think that whenever we start a new business, as mentioned, it needs to fulfill our own business requirements in addition to being really valuable to our customers. So more sticky service in that case.
And you also mentioned that you see some growth possibilities in Finland. How do you view your geographical footprint between Sweden and Finland developing here forward?
Yeah, I think right now more than 80% of revenues come from Sweden, and I think it would be nice to increase it, being a Finn, to have more revenues in Finland. I think we had plans already to start expanding the platform to Finland, but they were interrupted by the turmoil of Corona. So we will start to look into them again, and there is a potential definitely there.
And you also mentioned that the tech companies and software companies are taking a bigger share of the total economy. What usually happens to your possibilities to make business during this transition?
Well, I think key is really to build partnerships, Software vendors rarely have the competence, and we have, as mentioned, and the outcome of those projects, it's not always 100% for sure. So I think we can complement and cooperate to make things better for our customers.
Okay, and lastly, Edvard, you mentioned that you have a new financial target of 10% EPS growth. How do you view the balance between sales growth and increasing your profitability?
I think, short term, we want to stabilize the profitability on a clearly higher level than previously, and thereafter, I think we can start to grow as well. But they go hand in hand in our business because we typically can get more revenues based on the current sort of machinery. But overweight on profitability short term, then gradually increase growth.
Okay, perfect, Edvard. And I would like to thank you for coming here and presenting with us at ABG today.
Good. Thank you so much for having me.